I've spoken to a lot of traders and I've noticed the biggest issue which is stopping profitability is you either don't have a lot of data, which is crazy in itself, and also a lot of you guys don't have a trading plan or a strategy checklist. Now, I would say you need both. A lot of people fit the strategy checklist into their trading plan and they just class it as one thing. But I think it's good to make two so you know exactly what you're doing for your strategy A, B, C, D. This is how I enter, blah, blah, blah. And then also your trading plan. This is how I risk. This is how many trades I take per day. This is the session that I trade. So instead of just telling you guys what to do and how to make a trading plan, we're actually going to make a trading plan from scratch for Bob. So as you can see, we're on our dock. First things first, we're just going to have Bob's trading plan. And I'm going to keep this, I'm not going to make this super fancy, but the first thing that I would say, which is really important in my opinion, and a lot of people don't actually have this, but for the days that you're not feeling up to trading and you feel like quitting and you think everything is just not working, you need to know what your motivation to carry on is, because it can't just be money. So what is your motivation for trading? So for Bob, Bob is motivated by the freedom of trading. Bob likes the idea of waking up, trading for 3 hours and then being able to have the rest of the day to himself. So that's what I'm going to put for his motivation for trading. So short and simple, I am motivated by the freedom that trading provides. I'm motivated by the love for trading and my discipline to commit to my goals. Short, sweet, simple. You can read this before your trading session. The days that you feel like you want to quit and you're not pushing forward, read it. The next thing, which we're getting into the trading plan now, is your time commitment. So you can have your session and how much time you're willing to put in. For now, or what I would recommend is just putting your trading session, and you need to be really disciplined with this as well. If you say you're only going to trade London session, which is 8 a.m. for me, and you're only going to trade that for 3 hours, you only trade that 8 till that 11. You don't trade after 11, you don't trade before 8. You need to be incredibly disciplined with your trading plan. So for Bob, Bob is a 8 to 11 trader. He just wants to trade for 3 hours, wake up 7, get ready, start trading for 8, finish by 11. Now, Bob is also a responsible trader, so he puts the days of the week that he was trading. Some people don't trade certain days. I know some people that don't trade Mondays because it's the start of the week. They wait for the market to warm up. Some people don't trade Wednesdays. Some people don't trade Fridays. It literally just depends on your data. Bob trades every single day. Nothing wrong with that. But Bob does not trade NFP day because he is a responsible trader. So do not trade NFP day. Simple as that. That's his time commitment. The next thing that I would have is your trading goals. So Bob's goal is to be a full-time trader. Very realistic. It is possible as long as he puts the work in to get there. You don't need to overcomplicate this. You don't need to write big essays, big paragraphs. Just keep it nice and simple. So as you can see, Bob's goal is to be a full-time, consistently profitable trader while being funded over 200K. Once again, not unrealistic. If you notice, I didn't put a time frame for him to achieve this. I didn't say a full-time trader by the end of the year, a full-time trader within 2 years, as everyone is different. You don't want to put pressure. You don't want to say, okay, I need to make this much amount of money by this time, because then you're putting pressure on yourself, and a lot of the times it's not going to go the direction that you expected it to go. After that, we're getting into the real important bits. Not saying this wasn't important, but risk management is very important, and I want to start off with your risk attitude. So not necessarily what you want to risk, but your mindset coming in to the risk. So Bob is quite a conservative trader. He's not one of these high risk traders that flip accounts. Once again, nothing wrong with that, not sending shots. A lot of people make money that way, but Bob is quite a conservative risk trader. He wants to keep his risk between 0.5% to 1%. He doesn't want to go all in. He wants to make sure that he's in this game for the long run. So I'm careful and conservative with my risk. I have good risk tolerance as I'm confident with my strategy, but I am not a high stake risk taker. Once again, short, simple, sweet. That's basically what we're going for. The strategy checklist will be in a lot more detail, but the trading plan is just something that you can stick to, something that you can be consistent with. Once again, not large paragraphs. All right, so next, staying on to the risk side of things, you should have your risk management rules. So a lot of people risk different things. Like I said, Bob is quite a conservative trader. So per trade, we can start with that. Per trade is only going to be risking 0.5% to 1%. So Bob will risk 0.5 to 1% per trade. Then we can go on to how many trades he will take in a day. Bob takes a maximum of 2 trades per day. If he wins the first trade, he's done for the day. If he doesn't win the first trade, he may put risk onto a second setup. So next we go on to the markets that Bob trades. Bob only trades Forex and he only trades Euro USD. So we're going to add that. So next we're going to move on to strategy. Now this isn't a strategy checklist, but you can add what strategy you trade just as something that you can stick to. As I know a lot of people start strategy hopping, or they'll trade supply and demand one day, support and resistance one day. So it's still good to have in your trading plan what strategy you're going to trade and only stick to that. So for Bob, he trades supply and demand like me because it's the best strategy out there. And you can also add your entry time frame or the only time frames that you use. So Bob only trades on the 5 minute, 15 minute and 1 hour. And that's pretty much it for the trading plan. Obviously this is not a lot of detail, because it's just a quick trading plan that anyone can stick to. It has your risk management, it has your attitude to risk, it has your time commitments, it has the market that you trade, and it has the strategies that you're trading. There's also your motivation in there, which I do think is actually very useful for the days, like I said, that is not, things are not going your way and you're feeling a bit unmotivated. It's still good to give that one liner a read, lock back in, reach your goals. So next, I'm going to show you a strategy checklist that I think everyone should have. This is very, very, very important, as you don't want to be deviating from the things in your checklist. One day you're trading supply and demand and you're only taking setups with breaker structures. The next day you're taking setups that don't have breaker structures and you don't really know what's an A plus setup because you haven't really defined it in your strategy checklist. So let's move over to one of them. Now here's a strategy checklist for supply and demand, which I created quite a while ago that I used to use. Obviously, if you're not trading supply and demand, yours is not going to look like this. It will have your confluences and your confirmations and everything about your strategy that you need to get into trade. You should definitely have filters, otherwise you're going to be taking a lot of setups. You only really want to be taking A plus setup, B setups. You need to know how to filter out bad setups and only take the best ones. We're going to go through this. We start off with core requirements. So for supply and demand, obviously we need a supply and demand zone. Bob also likes to have a fair value gap and a breaker structure. That's his two main confluences. He wants a supply and demand zone, a breaker structure, and a fair value gap. Now, these are core requirements. These need to be present, otherwise he's not taking the setup. He also has his session and trade limits, which is in the trading plan as well, but it's good to add it to this as well, just so you can stay on top of your shit. Entry conditions, must have fresh supply and demand zone. Zone contains fair value gap, which we have in the core requirements. Breaker structure, we also have in the core requirements. Now, the next are additional confluences, which boost the setup's probability of winning. We have high time frame confluence, preferred but not required. Trend alignment, so is it going with the 5 minute trend and also the 15-minute trend? The zone approach, did it come straight down to the zone or did it come choppy to the zone? These are all things that you need to look into. The zone strength, how big is the zone? Is it a 2 candle zone? Is it 20 candles that come from the zone that were created from this zone? How strong is the zone? Then we have our filters. This is very, very, very important. So for Bob, he doesn't like old zones. I would even add, instead of this, a specific explanation of what a old zone is. So no zones which was created more than 4 hours ago. So Bob doesn't take zones that was created more than 4 hours ago, because them are old zones. They may not be as strong. Obviously, it depends on your strategy. This is just Bob's. No multiple breakup structures coming down to the zone. Once again, another filter, if breakup structures are coming down to the zone, that zone may not be as strong because the momentum is going in the other side. No trends with 15-minute alignment only. So is the 5 minute going in the opposite direction? Is the 1 hour going in the opposite direction? And only the 15-minute is going with the trend of the buy or sell that you want to take. Now, position management, once again, depends on your strategy. Bob has targets 1-to-1. Bob adds to his trades if price action is clean, then he moves his stop loss. For some people, you could have trailing stop losses, or you just don't move your stop loss, or maybe you move your stop loss to break even after 1 to 1, after 1 to 2, after 1 to 3. Maybe you take out half. This is still position management. Maybe at the 1 to 1, you take out 70% of your profits. At the 1 to 2, you take out another 50%. You know what I'm saying? It really just depends on your strategy. Now, continuous improvement. Definitely have this. Review all your losses and break even trades weekly, and also wins. Review everything. That's not on here, but that should be on here. Look for violations of rules or common breakdowns. You will break a rule, it will happen. And you might not even notice that you're doing it in the time, especially if you're starting off. Make sure to journal everything and make sure to look back, figure out what you did, improve it so you don't make that mistake again. Maintain consistent risk and build emotional resilience during streaks. You know, that's pretty self-explanatory. And then I just have something at the bottom, or Bob just has something at the bottom, which is execution discipline equals long-term profits. Stick to the checklist, no exceptions. Track every trade like your life depends on it, because it does. If you're not tracking your trades and you're trying to be this millionaire trader, you know what I'm saying, it's not really going to happen, is it? So that's pretty much it. Everyone needs a strategy checklist and everyone needs a trading plan. And I can't stress this enough, because there's so many traders that I speak to that don't have either of these, and it's actually quite sad, because I think you need this before you even place a trade. You shouldn't be placing any trades and just going in blind without a trading plan, without a checklist, without a simple set of rules that you're going to stick to, because the odds are that you are going to lose your money and you are going to blow your account. This is to protect your capital, and this is to show you the probabilities of what's going to win and making sure that you stick to them probabilities. So that's pretty much it. If you like the video, subscribe. I'm making content again. Definitely going to stay consistent this time. Definitely going to get multiple videos monthly. So, you know, might as well subscribe. And yeah, in a bit.